Welcome to the second edition of the Allsop Prop Chat. My name's George Walker. I'm a partner and auctioneer at Allsop, country's biggest property auctioneers. We sold nearly £750 million commercial and residential investment property last year. We're here today to look back at the commercial market in 2019. We're going to base some of our chat on the annual review, which was published at the beginning of 2020. That's available from our website, allsop.co.uk, under the Market Insights section. And today we'll be going through some of those examples and using some of the data, but of course there's a lot more on the site for you. To guide me through this, I've been joined by someone who actually has a different take on these. He's been using the auction process to support the work of the fund at Columbia Threadneedle, Ben Beck. So Ben, introduce yourself.
Sure. Well, thank you for having me. As you said, I work at Columbia Threadneedle in the investment team. I'm responsible for supporting the fund managers in both acquiring and disposing of commercial properties across various of the several portfolios that we manage. And as you say, we've been quite an active user of the auction process over the past couple of years as a very useful method of disposing of some of our predominantly retail assets, evidenced through the 72 sales that we've done since December 2018 across.
Is that right?
That's across all of our funds, but it's it does just show how effective the auction process has been.
So of those 87, I didn't know it was that many assets.
72.
Were there
December 18.
There was obviously the Specsavers in Hutland, which I thought was a highlight. Any other particular highlights that stand out for you?
I mean, I think the interesting thing, because obviously there has been a significant amount, and there's some extremely good isolated or individual asset sales within there. But the interesting thing is that on one of our portfolios where we sold 18 lots with Allsop last year, we did so at a 24% premium to the valuation. Now, I think that's a staggering statistic because, again, whether this is media-led or just hype, we've been told that retail is being sold at a discount, that retail is over and it's out of vogue. Now, that couldn't be further from the truth.
That's just good old-fashioned demand, isn't it? It's putting it against. And interesting, you used the private client desk at Allsop to sort of pre-market quite a lot of these assets as well. So it's been a rolling programme for, as you said, December 18. So slight double whammy from both teams. Is that worked all right? I
think so. I think in some cases, an asset might be more suitable for auction, or it might be more suitable for private treaty. I think the way that generally we would determine that, there are certain pricing restrictions. I would say, if you're selling an asset upwards of, let's say, £3 million, the known database behind that private treaty team, who this can be directly channeled to because they buy these exact types of assets, they bought in these towns, etc. We can utilise that, and we know that the sort of the process will lead us to the best result. Whereas for a lot of our stuff, we don't necessarily know who the buyer is going to be. At the smaller end, some of the things we've sold, we're confident that this is an asset which is suitable to be marketed, but we don't know who we're going to end up with buying this. And I think that's where
I'm pleased to say we don't either.
Absolutely,
that's why it works, isn't it?
But fundamentally, I think that's why the auction process does work very well for certain assets, because where there is sort of potentially that uncertainty of not knowing necessarily, we might have an idea who might be buying it, but not knowing necessarily who your end buyer is. To be able to put it to auction and really let the market decide, be it in the room or on the phone or whoever ends up buying it. But it's worked well. It's been a two-pronged process utilising both teams at Allsop. But as I said, we've had a very successful suite of results. It's enabled us to suitably position our portfolio, and we've reduced our retail weighting somewhat across several portfolios. It's been a very, very positive 2019 for us. Okay,
so when you say funds, so basically we are dealing with buy-to-let commercial investments, I guess is the easiest way to describe it. Lots of different funds. I mean, Columbia Threadneedle, $8 billion under management in property?
Yeah, I mean, it's that sort of level. It clearly fluctuates. However, we're one of the major UK managers of commercial real estate, own several properties across the UK with a hugely diverse property and tenant basis. And lots of these funds sit in various different strategies and portfolios which we manage.
So you're going to be going to hundreds of millions of pounds starting from 200,000 or 300,000, I guess.
Absolutely. I mean, look, as evidenced by the auction process, we've managed to dispose of of assets as low in value as, say, £69,000, I think was
really?
the sale price of one asset, right up to a very different level, which clearly it wouldn't be appropriate to utilise the auction process for.
Yeah, sure. So it's big lumps of central London in across the board. And each fund, I mean, so there are a number of different funds. Does that imply, for the more novice investor, does that imply lots of different mandates within that global Threadneedle blanket?
Absolutely. I mean, there are various different strategies and portfolios which we run, and the investor base is also highly diversified. So all of the different products that we offer, there are different strategies in place. There are different investor pools which fundamentally dictate the way which we manage those portfolios. And it happens that a lot of the funds have utilised the auction process because across the board we've seen it as a very good way of achieving some very strong results, but also certainly in let's say the last 12 months, which is the period picked up within your focus here. It's been a way of us being able to look at sort of reweighting some of the portfolios, selling out of some of our retail holdings, and that's applied across the board. Okay,
so clearly there's some of the smaller ones which, for a fund, is probably better off managed in the hands of a private investor, really. If you've got a £200,000-300,000, I guess a sort of £500,000 asset on a high street in the East Midlands probably takes as much time to manage as a single letting office in the Docklands.
Yeah, I think it's an interesting point you make. I think regardless of the size of the income stream, there will be an asset manager who is assigned to that particular asset who fundamentally it's their job to make sure that they defend and enhance the value on behalf of our investors. So, where it be a £10,000 income stream or a £100,000 income stream, the same amount of work will go into that. And certainly over time, as these funds have evolved, the buying requirements and the sort of assets held in the funds do change over time. But, we are constantly reviewing those portfolios and ensuring that we have suitable sector weightings in, be it industrial, in retail, in offices. And likewise, we're reviewing those individual assets, and there comes a point in time where there's an opportunity sometimes to sell these assets at a profit, and we would look to do so if it fits in with the strategy.
Now, we were talking earlier about retail and the 71% of what we sold last year, over £300 million is retail. God, we're sick about hearing the high street is dead. The high street clearly isn't dead. It's gone through an evolution. You've got an interesting stat about sort of online sales.
So clearly the high street has some structural issues which are being addressed, and that's being sort of filtered out throughout the sort of property world.
It's well documented, isn't it?
It's extremely well. It's extremely well documented. But the stat that you're referring to, I think of all the countries in Europe, the UK has the largest proportion of online to in-store sales, be it circa 20% of all sales are made online as opposed to in physical stores. And that is significantly more than any of the countries on the continent. Which is why this sort of trend has been seen of a growing move towards online sales. And there is no doubt that there are certain towns in this country where there is an oversupply of units, where there is a particularly high vacancy rate, and it's difficult. And there are certainly challenges that are facing a lot of retailers, which has been borne out in CVAs, as we said, have been widely publicised. However, circa 80% of all retail sales are still made in physical stores. So far from the complete demise and destruction of the high street, there is still an absolute need for these physical stores for people in their daily lives.
Yeah, and we can't let today pass without the highlight of last year. One of the smallest assets you own, the Specsavers in Hucknall. That was a sort of February or March auction, wasn't it? A nice little piece. The informal know what I mean by covenant, but a Specsavers is a user people understand, because a lot of people, including me, wear glasses and will do for a long time. The rents are typically quite small, so 25, 35, 45,000. And people just believe every day of the week the Specsavers will be incredibly busy. Now, this little piece at Hucknall, we had two people sitting in the front row of the auction that really wanted it. What price did we get for it, Ben?
I don't have that on my schedule, I'm afraid.
Yeah, as you could guess, I did. It was better than 5%, but it was, it's interesting because there was tremendous price in that small town. It's a tight town. The investment market seemed to think every shop in Hucknall was worth 5% following that sale, but no, it wasn't. But it was one small example. You mentioned granular. And that's where the little investments are not really the demise of funds, as you go forward and evolve and try and buy, big lumps of central London.
I mean, it's an interesting illustration, actually, of Specsavers, because ultimately there are certain retail uses which really demonstrate the point of the need for physical retail shops. You can't see the optician going online anytime soon, as you can't necessarily see chemists moving wholesale online. There are certain types of retailer where they will always want their place on the high street, and people need to go into these places to, be it visit the pharmacist or get their eyes checked. And fundamentally, that could represent an interesting investment, because they're the type of retailer who don't tend to relocate. They'll come to lease expiry, and there's a very significant chance that they'll re-gear a lease and stay in that location. In many cases, these types of businesses have been wedded to specific locations for decades, quite possibly, on certain high streets. So that represents potentially for an investor an interesting income stream, or the opportunity to certainly improve the income stream. If, say, for instance, there's only a few years left on the lease, there is every chance that they'll be able to increase that lease term.
Yeah, and what every fund manager wants is to convert all his single 1 or 2 year leases unexpired to 15-year leases, because then the value goes up, as you've seen in the auction. So, I mean, what I think that you've picked up two sort of quasi-healthcare tenants there, Specsavers and the pharmacy, because people have to go back every month and get, every 6 months get their eyes tested, and perhaps every month and get a prescription. You have the nirvana which retailers are after, which is a click and collect. So if you look at the Apple showroom or the Dyson showroom, these units they're taking, they don't actually sell product, but they get people in there by web offers, by promotions. They stroke it, they feel it, and then they can make sales online.
Exactly that.
It's kind of the clicks and bricks marriage.
I think within this retail era that we've entered into, I think the retail that ultimately is going to survive, it's quite often experience led. So, those retail brands that are doing really well, they're utilising high street shops to showcase their brand. You experience the product or experience the brand that you might have seen online, or you might have seen on TV adverts or general advertising. It's a new way of shopping. I mean, Amazon have really been a leader of this. You may have seen their new sort of supermarket formats where you don't need to pay and you walk out and it all automatically.
Bang up to date, isn't
Absolutely.
it? Wave at the till.
Fundamentally, these are all interesting new concepts which are changing the way that we utilize physical retail stores. Yep. And the retailers who understand that concept best and integrate that into their physical store network are the ones who are going to thrive in this new retail environment.
So that's a lot of coverage of the retail sector. I mean, overall, as I said, 70% was retail last year. I mean, looking back at the 12 months, we had we started the year with a massive high. We did the biggest lot we ever sold, £12.5 million under the hammer. Really nice trophy asset. And we finished in December. We had an auction 3 days before the general election, which was interesting timing. The outcome, though, I think defied the date, because it seemed like the buyers really knew what the result was. And we actually did the highest success rate for over 3 years. So that was a really solid day. And buyers were, across the board, looking at all sorts of different things. And one of the growth areas, and which will probably play out really, with central government focusing on the regions, there is talk of growth out of central London in offices, growth in industrials. Were you buying last year, factoring in growth going forward in those non-retail sectors, Ben?
Absolutely. I mean, we're constantly looking for opportunities, and there has been significant growth in the industrial sector, for instance, over the past couple of years, and that a significant proportion of that has come through the growth of online retail and the need to distribute the product. And I heard that the fact that there is such a large proportion of returns to online retailers now. Some mention as much as 40% of all items bought online are returned.
It's all centralised, isn't it, into
correct.
A warehouse?
And exactly that. It creates a significant logistics network, and ultimately that needs to be backed up with physical real estate where this product can be sent back to and processed and repackaged, etc. So
and I guess that they're big schemes, but they have a knock-on for the smaller units. Do your spreadsheet spods, are they saying this growth in rents is going to continue? Is that the sort of the medium-term projection?
I think we always have to be cautious with when looking at rental growth figures. I mean, lots of these figures are generalised across a sector. So even if, for instance, the logistics market has done particularly well over the last couple of years, there will be certain markets and sub-markets within that which have performed better than others. Yeah. So I think that's where it really comes back to that sort of due diligence process and really understanding these assets, the nuts and bolts of the property, the micro location, the tenant covenant, and then the sort of bigger picture and where that fits into both the regional and national picture. And once you get all of that builds either a yes or a no when you're sort of making that investment decision.
So that's one thing that I think the private investor without the resources slightly struggles. Looking at an office building of £2 million with a dozen tenants is quite hard. If you look at a shop, is it busy? Well, you can stand outside it for an hour on a Saturday and on a Tuesday and make your own judgment. Are people coming out of it with shopping bags? Industrial's a bit harder. I guess it's supply locally, isn't it? And what sort of businesses are in there? Are they businesses that look a bit scruffy, or are they actually long-term bets?
There are multiple facets which make that up. I mean, fundamentally, you'll look at the tenants that you have in there. Have they been in the building for a long time? Have they been committed to the location for the long time? How are those businesses performing? Over the last 3 years, what do their accounts look like? What are the projections going forward? Are these businesses which are wedded to locations, or are they looking to consolidate? It's all of these things in conjunction which kind of feed into our decision-making process. And then there's obviously that comparison piece as to, am I getting this at the right price? And does my analysis over a period of time make this look like an investment which meets the needs of the fund and the underlying investors?
Yeah, so you what always goes well in our auction rooms is the tidy investment. So a nice modern tray counter which is still shining sort of out the packet. Little modern parade of shops with a convenience store anchoring up, that sort of thing, because the dilapidations isn't breathing down your neck. It looks like it's been well looked after. The flats are in good order, and this is what the private investor can say. Well, does it look decent? And they can make the decisions. And so you're saying that really applies also to offices and industrials. That there is a potential overhang of landlord spend, but if it's in good nick, do the work on and suss it out for yourself. Absolutely.
I mean, these are in a price bracket which appeals to the individual investor. The many investors who previously may have purchased residential as either a second home or investment have been the stamp duty changes which have affected that market have led many to identify an opportunity in retail where now you can buy some of these assets off a very healthy day one yield.
Average year to return 8%. So that beats a flat.
Well, if you put your money in the bank today, you might struggle for 1%.
So planning is a key. Some of these assets you're getting out of. I mean, the planning regulation for converting retail to residential, that's not on the horizon anymore. It's there, and that is an incentive and a help from central government or the planning authorities to allow these town centres become more populated. And I think we've seen some of these yields go very high in some of the retail assets we're selling, but people are going to do all right out of them, aren't they? Because they're going to get the running yield and benefit from that planning and then enhance it, put more feet in the town.
Yeah, I think the planning system, that's a key point that you refer to there. I think certainly in towns where there is an oversupply of shops, and this is sort of up and down the country where you walk down high streets and then you see these letting boards on numerous units, and it's been that way for some time. In those locations, it's certainly going to be the planning system which frees up that backlog. Without a sort of some relaxation within the planning system, you struggle to see the occupational demand in those locations. But where they are able to grant consent for alternative uses, that's where you're going to bring the vibrancy back to some of those locations. And it's absolutely key. And ultimately for the private investor, that I suppose is also an opportunity to add value to their holding. Yeah. If you can secure a planning consent which gives you that flexibility, whether you deliver it or not, that certainly defends, if not adds value to that holding.
Yep, and interestingly, last year I think we sold, when auctions are typically known for selling shops with flats above, we actually sold 2 flats with offices above, which is in Altrincham in the middle of last year, which is interesting to us because someone had used the planning system to their advantage. Everyone wins. You get a couple of flats out of it as well. Thank you for listening to the Allsop Prop Chat podcast, the first of a series of 2 in early 2020, looking back at our annual review of 2019. Next time, we'll come back and we'll look ahead. I'm interested in what you see where people should be investing, and let's have a bit more of a dig into the alternative sector. But you can find more detail on the Allsop website, allsop.co.uk, under the Market Insights section. My name is George Walker. You can find me too at george.walker@allsop.co.uk, of course on LinkedIn. I've been joined this afternoon by Ben Beck of Columbia Threadneedle, and thank you very much, Ben, for your time.